Hey there, welcome back to our channel. Today, we're diving into a fundamental topic that plays a huge role in the world of real estate and home ownership. What is a mortgage? If you've ever wondered how people are able to afford their dream homes, you're in the right place. So let's jump right in and demystify the concept of mortgages. At its core, a mortgage is a type of loan specifically designed for buying real estate, such as a house or an apartment. It's a financial arrangement between a borrower and a lender, usually a bank or a mortgage company, where the lender provides the necessary funds to purchase the property. Here's how it works. Let's say you want to buy a house worth $300,000, but you don't have that amount of cash up front. That's where a mortgage comes in. You'll make a down payment, typically a percentage of the home's price, and the lender covers the rest. The mortgage loan comes with specific terms, including the loan amount, interest rate, and repayment period. The repayment period, often referred to as the term, can range from 15 to 30 years, during which you'll make regular monthly payments to gradually pay off the loan. Now, let's talk about the two main components of your monthly mortgage payment: interest and principal. The interest is the cost of borrowing the money, while the principal is the original loan amount. As you make payments, the balance of the principal decreases, and you'll pay less interest over time. One of the fantastic things about a mortgage is that it allows you to build equity in your home. Equity is the difference between your home's value and the remaining balance on your mortgage. As you make payments and the property's value increases, your equity grows, and that's an asset you can use in the future. There are various types of mortgages to suit different financial situations. Fixed rate mortgages offer stable interest rate throughout the loan term, while adjustable rate mortgages may start with a lower rate but can change over time. Government-backed loans, like FHA or VA are designed to help certain groups of borrowers. Remember that down payment we mentioned earlier? It's a crucial factor in securing a mortgage. The amount you put down upfront affects your loan terms, interest rate, and even whether you need to pay private mortgage insurance. If your down payment is less than 20, owning a home through a mortgage brings both excitement and responsibility. Along with making mortgage payments, you'll also need to cover property taxes, homeowners insurance, and potentially homeowners association, HOAP, fees. It's important to budget for these additional costs. And there you have it, your crash course on what a mortgage is. It's the financial tool that empowers many people to achieve their home ownership dreams. We hope this video sheds some light on the concept. If you found it helpful, don't forget to give it a thumbs up and subscribe for more informative content. Thanks for joining us today, and until next time, stay curious and keep learning.